how to store receipts. Thank you for joining me today. I'm Dalton Green of Green Financial Online Inc., and this is Tax in 10. Today we will explore how to store receipts, how long to keep them, and what formats are acceptable. Let's begin with the types of receipts. Receipts come in two forms, hard copy and soft copy. Hard copy means paper receipts you receive from retail stores, restaurants, etc. Soft copy receipts mean electronic receipts. This includes emails that contain a link to the bill or an email with an attachment, or the invoice is in the text of the email itself. Both hard copy and soft copy receipts have two stages, original source document and proof of payment. We'll start with what an original source document is. Original source document is the original piece of paper from the store or the original email. Both are original source documents regardless of their form. Everyone prefers if you keep the original source documents. These are the best defense you have and are accepted by everyone as valid. Unlike other countries that allow for pictures of receipts to be taken or a digital image to be kept of a receipt, Canada, in my humble opinion, made the logical decision and ruled that the owner of the original receipt may claim the expense. No one else can. For example, our neighbors to the south consider cell phone pictures of a restaurant receipt as a valid receipt. It is unclear what happens when 30 people in a restaurant take a picture of the same receipt. The math gets interesting if the receipt is for a large event like a business celebration or a wedding party. Not to worry, here in Canada we have a common sense approach. Whoever has the receipt can claim the expense. But basement floods, fires, divorces, children that learn what a paper shredder can do, moving losses, etc. all happen every now and then, and the original source documents are lost. That is where the proof of payment saves the day. Proof of payment comes in the form of bank and credit card statements. They are not the original source document, but they do show the date, vendor, and amount paid. The CRA does not like to accept proof of payment, but the Tax Court of Canada will, if you can prove a fire, flood, etc., destroy the original source documents. If you get help from a tax professional like the ones at Green Financial Online Inc. to help you, CRA will accept them and you don't have to go to the Tax Court of Canada. But due to the extra costs and time involved in getting proof of payment approved by the CRA when it was not a fire or flood that destroyed them, but simply poor or lazy bookkeeping, it is best to keep original source documents. Not doing so can become an awfully expensive habit. Now that you know the two forms of receipts and the two stages of each, the next set of rules you must know is how to store receipts and for how long. We will start with hard copy receipts. Paper receipts must be kept for 7 years. No exceptions, not negotiable. 2 steps in storage of hard copy receipts. Step 1, label a hang folder with the year you are saving the receipts for. Step number 2, put the receipts in the folder. That's it. In 7 years, you'll have 7 folders, each labeled with a different year. You won't be audited every year, so why spend the time to sort receipts by category or month? I have never sorted my receipts and have survived an audit or 2. As long as you keep them for 7 years, you will sort them when you must. Some people notice that most stores don't use ink anymore, but use heat impression to toast the receipt onto a piece of paper. This means the image sometimes rubs off, even if it's just stored in a hang folder. There is no need to copy all paper receipts, as you can imagine the fun guys like me could have if I was allowed to present a blank slip of paper as the original and then something I created as the backup. I would have millions of expenses every year if I was allowed to do that. Now let's look at soft copy receipts. Like hard copy receipts, you must keep email receipts for 7 years. No exceptions, no negotiation on this point. To store soft copy receipts, there are 2 steps. Step number 1, make a folder in your email program with the year you are collecting the receipts for. Step number 2, drag the email with the receipt or link or attachment into the folder. That's it. Do not print them or save them as a PDF or any other time-wasting method which defends you against what some imaginations create as a CRA audit. The important part here is the fact that you kept them for 7 years. So backing up your computer regularly is a consideration. Basically, dicing with the devil is a monthly backup schedule. Risky is a once-a-week schedule, and due to the importance and reliance we now have on information and electronic communications, Once a day seems to be the recommended schedule. There are many software packages that can do this automatically for you. So that is how to and how long to keep both types of receipts. In addition, which receipts to keep is of great importance. Knowing the bookkeeping rules that apply to you is mandatory. The bookkeeping rules for a small corporation are not the same as the bookkeeping rules for a self-employed person. What rules apply to you affects how you buy items for your company and will determine if your deductions are defendable. My company, Green Financial Online Inc., takes every customer through a 2-hour bookkeeping training session to ensure they know what to do, how to do it, and based on Tax Code of Canada rulings, what not to do. I guarantee that your tax idea or issue or question has gone through the Tax Code of Canada at least 20 times already, and there is an answer. As the Tax Code of Canada is a Supreme Court, their rulings are the only interpretation that counts, not yours and not mine, and not even the CRA's. When you play the game, you need to know the rules. For example, how you purchase items affects your receipt collection behavior and allows for good document control protocols. You may have seen this in a store before. One person puts many items on the belt, then puts down the plastic divider, and then puts more items on the belt. They pay for both groups of items separately, but with the same credit card. They're not insane, this is done for tax purposes. Instead of highlighting the business items from one large receipt, they make 2 receipts, one containing personal items, one containing business items. The personal receipt is always first, the business receipt is always second. So when you or your bookkeeper looks through your credit card and bank statements to make the monthly bookkeeping ledger and sees back-to-back purchases from the same store on the same day, they know the second amount is for business. I and everyone at Green Financial look forward to helping you. Thank you for watching this video, and if you need a tax professional or bookkeeping services to help you with your situation, please contact me at one of the following.